Hey guys, welcome back to my channel, and I'll be breaking down the trades for Thursday and Friday this week. Thursday, the Thursday the 17th and Friday the 18th trade for this week. This week was a little tough. Price action was a little choppy. Some losses could have been avoided, some couldn't. But all in all, I ended this week in profit. This is a first week back from the first account, the first funded account from Monday to Friday. I already broke down the Monday to Wednesday trade, and now I will be breaking down the Thursday and Friday trade. So guys, as you know, when you come into the chat, we come in the chat at 7. We come on the chat at 7 a.m. New York time, looking for relative equal lows and relative equal highs, and looking for price to make these relative equal lows and trade away from them, giving us a entry pattern or a reversal pattern to come back down to take out the highs, or go up to take out the highs, or come down to take out the lows. So on Thursday the 17th, I came into the chat, price traded down, made this low, trade up, made this low, and traded away from these low. This trade ended up into a loss. This trade could have been avoided because I broke my rule. I didn't wait. This After price made this low, it traded up and took out this high right here and started trading down back low to come down to take out these relative equal lows. But I did not wait for price to close. So when I saw this huge bearish candle, when it closed inside this inverted fair value gap here, this fair value gap right here, when price come down, it didn't close under the fair value gap. I saw that it opened after this huge bearish candle, and then it opened with this volume imbalance down here, that area here outside of the inverted fair value gap. I took the entry, which was 20 contract, because the stop was so small. The stop was only 5 points, 5.5 points. So it afforded me to risk my $250 and still take out the 20 contracts. But where I made the mistake is I didn't wait for price to close underneath of here. If I waited for price to close underneath of here, then I would have avoided this loss, because as you can see, price did not close underneath of here. It opened out, but it did not close in terms of having a bearish candle closing underneath of this fair value gap outside. So I had to wait for price to close outside of this inverted fair value gap, go push up back, retest it, and start going down to take out the lows. So as you can see, it happened here, where it did close outside of the fair value gap right here. It closed on this candle here. As you can see, price was inside. It closed on this candle here, retrace and tap this fair value gap, tap the inverted fair value gap, and then push down heavily to take out the lows. So that ended up in a loss which could have been avoided. And then I took a second loss on that day here, when price took out these lows, the relative equal lows, this low and this low, relative equal lows, and then made a set of relative equal lows in terms of these lows, pushed down, take out these lows, and pushed up back. It pushed up, giving me the fair value gap, but I didn't get a close above this market. Here would have been my market structure shift. Here would have been the market structure shift. I didn't get that, a close above here, so there was no trade. Even though I had the fair value gap right here, there was no trade, because price did not close above here according to my model, according to my rules. But we did take these relative equal lows, so we were looking for price to push up. Then price came down, reaches this fair value gap, and then pushed up again displacing up with this huge bearish candle. So when I saw this huge bearish candle, I set a limit, I think here, for 10 contract, and I placed my stop below here. The mistake that I made was placing my stop here instead of here. This exact thing happened to me already, where I took losses because I placed my stop here instead of here. This I still avoided losses already based on my rules. I avoided losses because I placed my stop here instead of here. It's all about journaling your trade and looking and see what works and what doesn't, and making your rules according to your trading plan. So my trading plan and my rules should have allowed me to place my stop here, taking out probably about 7 contracts instead of the 10, which would have afforded me to lose about the same amount I risk on every trade, about $250 per trade to make $500. If I place my stops here, as you can see, I have it planned out right there. If I place my stops here, then this trade would have been a winner instead of a loss. So on this both trade, I could have avoided these losses right here. And as you can see, price then displaced up and went up to a nice 1 to 4, 1 to 5. So here, after these two losses I took, price went up and did come down to take out these lows, these relative equal lows here, and the initial relative equal lows at 7 years, the relative equal lows that price made that I was looking for price to take out. Here it came down, take them out also. I then took a next trade. It was a bit over trading, but I saw the entry, and the entry was a good entry. So I end up taking a next entry after price push down, made these relative equal lows, pushed up, and then came back down. It took this relative equal low with a fair value gap, an inverted fair value gap, pushed down, took it out here, and then started displacing up. When I saw that price close above this inverted fair value gap right here, I have it marked out right here, close above, came back down to retest, took 5 contract. So that was the exact thing I was looking for to happen here, but I rushed the trade and took my entry too early. So I was looking forward for the same thing to happen here on this trade, but price, I didn't wait for price to close below with a bearish candle, close below with a bearish candle. So I end up taking the entry too early, and I end up losing that trade. So this would have been the exact trade I should have taken on the other side. Here, come down, take this relative equal lows, waited for price to come retest this inverted fair value gap, and go upside. Took 5 contract, took out 4 here, please stops at break even. Price came back, took me out at break even. So I end up having a small profit on Thursday, I think. So let's go to Friday's trade, or trades should I say. So I came into the market on Friday. Price action was horrible on Friday. At first at 7 o'clock it was trending, but then at about 7:25 it starts moving sideways, printing sideways price. So we came into the chat 7 o'clock, so the price push down, push up, made these relative equal low, this low here, this low here. These was relative equal lows, price pushed up, came back down, push up, made these relative equal highs. So that price made these relative equal highs right here. This high, this high. Left it, traded down, then traded up with displacement. When I saw price traded through these relative equal highs with displacement on this fair value gap, I put a limit here for 10 10 contracts in this fair value gap with stops below here, aiming for 1 to 2. Price pushed up in my favor, then price came down, made these relative equal lows, then push up, came back down, not taking this relative equal lows and push up. By that time, I knew that price was not willing to go up because it chopped around too much, made these relative equal lows, and it wasn't pushing up. So I knew that price was coming to take these relative equal lows with my stops here. But my rule was to set and forget, actually. To set and forget, not moving my stops or closing my trade. Because more time than less, when I close or move my stop, is either it take me out at break even and the trade run to my TP, or I made put in my trading plan that I would not move my stops. So price came down, take these relative equal lows, boom, take out these relative equal lows also. So when I saw that price displaced through these relative equal lows, after I took the first loss, taking me out here, price displaced through this relative equal lows with this fair value gap, traded through this with this fair value gap. I thought that this was going to be a breakaway gap right here. So I took my entry on this fair value gap, placing my stops above here, I think. Yeah. Then price reverse, did not trade down. Traded down for a while and then traded up back, took me out, took out my stops here. So that was two loss that I took. I recouped these losses by having this marvelous trade here. I think I took a trade here because when I saw price took out this low, this place up here, close above here, I could have taken an entry here, but I knew that price stalled here in the earlier on in the morning, so I wanted to see price close above here before I take any other trade. So when I saw that price closed above here so with this fair value gap, price traded back down into this fair value gap. I took an entry, stops below here, right it up here, took up my 10 right here. So that was one trade that I took. And I took a next trade also. I think that ended up in break even. Yeah, I think. Yeah, so that was it. Oh, I took this trade, I think. That was a trade. When price hit this fair value gap, that was the fair value gap at 9:30. I saw it hit it and reject it and then started displacing down. I took an entry here. I took an entry here looking for price to close below this fair value gap. But then it just shut down. I was looking for a price to come and take out these lows that was made in the AM session, the relative equal lows. As you can see, price came down, made these relative equal lows once more again with these lows. I took out 8 contract after I took out the 8. I sell 10, took off 8 here. Price came back up, retested this inverted fair value gap, pushed down, took out these lows that was made, the relative equal lows, the first relative equal lows that was made in about the 7 o'clock area. Took that out, took off my last contract here. I left two, took one here, took out one here when we took off these lows, placed my stops to break even. Then price came back reverse, took me out here for break even. So I had a win on that day. I think a small win. Let's go over the account for the first week back. As you can see, the P&L is $864. We have 2,130, let's say $35 and change to go before we pass this account. And this is the results for the week. The first day on Monday we had kind of a break-even day. Tuesday we had a small win of 215. Wednesday we had some losses and recouped these losses. No, I think that we had a small win on Wednesday also. On Thursday we had the two losses, recouped the two losses and made a small win. Make some small profit of $89. And on Friday we had two losses and we had two wins. Two losses and two wins. We had recouped our losses and we made a profit of roughly $400. So we are up $864.38 for the week. Looking forward to push that and double that next week if God's willing. Hope that price give us some good price action next week. So guys, don't forget to like, comment, subscribe. Peace out.